Welcome everybody to the next panel at the Planet MicroCap Showcase Virtual. I'm your host on behalf of SNN Network, Robert Kraft, and I'm so excited to introduce this panel that you will hear today. The title of it is Establishing Secondary Trading in the U.S., and it is being hosted by none other than Becky Popoff from B. Riley Securities, a sponsor for our event, as well as OTC Markets and Issuer Solutions, as well as SNN Network. So we thank you all for participating today. And with that, Becky, let's go. Take it away. You got this.
Thanks, Bobby. Hello, everyone. I'm Becky Popoff, and I'm a vice president with B. Riley Securities, and I work within our capital markets advisory group. Thanks to everyone joining us today, and a special thanks to Robert and Shelly for putting together another fantastic event. I'm really excited to be hosting today's panel. We put together a terrific group of experts, all of whom I happen to work with on a daily basis, to speak about the OTC quotation process and achieving secondary trading in the US. Now, each of our panelists bring a unique perspective given their focus areas, and our goal is to really walk you through the entire process from start to finish, covering all the steps involved in order to trade on the OTC. So with that said, let's have our panelists introduce themselves. I'll start with you, Mr. Chris King. Please kick us off.
Hi, everyone. Thank you for joining. Yep, I'm Chris King, Senior Vice President at OTC Markets Group. I've been with OTC for the last 7 years, and as head of the international team, my primary role is to help companies go public in the US. And so I started my career working for about 15 years, taking multinational blue chips out of Europe into the US, whether it be road showing, targeting, and messaging and IR support. But yeah, as I said, my primary role today is helping companies from all over the world be publicly quoted in the US markets.
Thanks so much, Chris. Now I'll pass it over to Mr. Mark Mahaffie.
Hi, I'm Mark Mahaffie with Issuer Solutions. I'm the founder and president, and we assist companies with obtaining DTC eligibility. We also have a network of high quality service providers that can assist companies with the going public process.
Thank you so much, Mark. And last but not least, I'd like to hand it over to Mr. Shelly Kraft.
Hi, I'm Shelly Kraft, and I'm the founder of SNN, which was founded in 1997. So that shows you how long I've been around Wall Street. We take the companies that we work with and provide market awareness and investor visibility. And we do such things as this virtual conference. And as part of the market awareness, we work with OTC, we work with B. Riley, we work with Issuer Solutions to provide the ecosystem for international companies to reach the secondary market in the United States.
Perfect. Thank you, Shelly, and thank you to everyone joining us on the panel. So to really kick off today's discussion, I'd really love to start with Chris from OTC to really dive into who is OTC Markets Group and why would a company look to trade on the OTC?
Yeah, good questions. So OTC Markets Group is a technology company, not a stock exchange. And that's important as, when people think about US financial markets, they naturally think of NYSE and NASDAQ. But the service that we provide is one which the major brokers in the US, if they want to trade non-NASDAQ or NYSE securities, they need a platform on which to communicate, provide liquidity and execution services. And so that's the technology that we provide. And so to think that sort of one step further through, when a broker is quoting a company on our system, what that's basically doing is switching on the lights across certainly all of the retail brokerage accounts. So it shouldn't matter to companies or investors where they fund their portfolios. So if you think about Schwab, Fidelity, E-Trade, Ameritrade, all an investor wants is to be able to log on to their, wherever they hold their portfolio, be able to put in a company name, see a US dollar quotation, trade the security in US market hours, right? They don't think about the plumbing. They just want access to the stock. So that's really the basic business model that we provide. And so as you look at our markets, we have more than 11,000 securities that are quoted on our markets. A few thousand of those are smaller companies who are not listed outside the US. We're their primary market or stock market. And for those companies, for a variety of reasons, they choose not to be on a US exchange. So maybe it's because they're very early stage. Maybe it's just not practical to take on the burden of a US listing. But the vast majority of companies that are on our market are what we would call international or non-US companies. And so these are companies that are listed outside the US. They're very shareholder friendly and transparent, and they're held to a very high regulatory standard in their home exchange. But the issue or the challenge that they face is, how do you open the door to US investors so that those investors can have access to news flow, have access to a US quotation? I'm not going to open a trading account in Spain to buy Repsol or in Germany to buy Adidas, right? My expectation as an investor is I need to be able to use my Ameritrade or my Schwab account. And so that, as you think about our market and the solution that we provide, it really just helps thousands of companies listed outside the US to have a really efficient mechanism to be able to open the door to family offices, smaller funds, the entire US retail investment community. Yeah, that's OTC markets.
Perfect. Thank you so much. Now, I think this is a good segue over to DTC eligibility. So I'd love it if Mark from Issuer Solutions can really chime in here on what it means to be DTC eligible and why issuers need it.
Thank you, Becky. So DTC stands for the Depository Trust Company, and they're a depository for securities that facilitates electronic trading in the United States. And it was created primarily to eliminate the reliance on paper certificates. They electronically record changes of ownership using an electronic book entry system and deliver those securities to customers' accounts. And so you can think of it as a shareholder who has deposits at their brokerage firm. When they go buy and sell securities for with particular companies, those securities actually transact electronically from one broker dealer to another. So it really helps facilitate an efficient marketplace and actually lowers the cost and time commitment in settling trades. And now, prior to obtaining DTC eligibility, it's important for issuers to have a 211 clearance. And so I'd like to turn it over to Becky to provide more information.
Absolutely. Thank you, Mark. So it obviously brings up a great point. Where I fit into the process is I help navigate the dual quotation process for issuers. And OTC Markets requires that all issuers work with a sponsor to obtain that QB quotation. But the first step in the process is the filing of the 15C211, which is the market making application. So we are a full service broker dealer and member of FINRA and have the ability to file that 211 on behalf of the issuer. So as we're waiting to gain FINRA clearance, which establishes the US symbol for these international issuers, that's when I really start the process with them on their OTC applications. And once we receive FINRA clearance, that's really when I can continue the process for the issuer. I let Mark know so he can then get his DTC eligibility process started while we're finishing everything up with OTC Markets in getting them clearance for the appropriate tier onto the OTCQB or the OTCQX, which we'll touch on in a little bit. And then the final step is for us, the sponsor, to provide the sponsorship letter on behalf of the issuer. And once that's done, the issuer will go from the pink market and onto the QB or the QX and essentially start trading on the appropriate tier. And that's really where I then turn to folks like Shelly to really start the market awareness program for these issuers. So, Shelly, I'd really love it if you could walk us through, once an issuer establishes that cross trade, when is the right time to start the market awareness program and really reach US investors through this process?
Immediately, if not sooner. And, I have to say that unlike movies and baseball, if you build, they will come does not pertain to companies that have achieved listing on the OTC, QB, or QX and have gone through all of the process that you all provide. So now you're sitting there as a publicly traded company, and part of what everybody needs to do is manage that issuer's expectations. Just because you're now listed and you can tell your friends and family, you have to compete in the marketplace with all the other companies that are publicly traded to attain an audience, to grab onto people who are going to become investor interested in your underlying security. And they want to know as much information about your company and even about the CEO as you and the C-suite of CFO, CTO, CIO, whatever's apparent. And that information has to get to a very live audience of investors, which at SNN, that's what we try to build. And we kind of play the match game of investors and companies to find interested parties to both find out more information, take a deep dive into the financials, look at the company, look at the sector the company's in. So you now have an information bank of information that can take all of the stuff that you guys have done and make the company successful trading in the US.
Absolutely. And obviously that is so important. And so, this takes us a step back. As I mentioned, when I was talking about our role as sponsor, issuers first have to determine, what the appropriate tier for them is to list on. So I'd love it if Chris could really walk us through the differences between the OTCQX, the OTCQB, and Pink, and really what does it all mean for these issuers?
Yeah, okay, thank you. Good point. And I would just concur with what Shelly's discussed, right? It's great that we can bring companies onto the market and switch the lights on, but you need to go out and tell your story. The ability to draw a crowd and continue to engage with that investor audience is critical. And so I often use the rather naff analogy of we can sell you a gym membership, but if you come back a year from now having sat on the sofa and drank beer or done nothing all year, you're going to sort of question why you did it, right? So you definitely have to think about how you service and maintain the quotation. And certainly we can touch on that in a bit more detail. But to answer your question, Becky, there's 3 tiers of the market. And I think this is one of the misconceptions is that just because you have a ticker and just because you're public and you have a quote means that everyone's going to be able to trade your stock. The reason for segmenting the market is that the pink market, which most people have heard of and probably have an opinion on, whether it's factually accurate or not, it depends who you speak to, but the pink market is an open broker-dealer market. You can be on there are thousands of companies on the pink market who have not sort of sponsored the process. They may or may not be DTC eligible. The pink market is the market on which all bankrupt companies, right? So a JCPenney or a Hertz car rental company, you get kicked off a US exchange, you have to trade on pink. If you are behind in your reporting or going through some kind of distress financially, you're on pink. And so it doesn't make you a bad company because you're on pink, but the reason why being on pink can be so problematic is that there's 11,000 securities here. And if you think brokers are doing their due diligence every day on 11,000 securities, you're wrong. And so I think from a company perspective, it's important to understand what pink actually means. There can be settlement challenges. Certainly there's a lack of disclosure because you're not posting materials through the OTC system. And so I refer to pink as sort of a disengaged market where you can be a great company, but you're driving the car with a handbrake on if that's your position within the financial markets that you choose to go and then market your story on. So the QB market, working our way up from pink, QB is a venture market. The rules are written to allow the very small and early stage companies to differentiate themselves from pink. The brokers, going back to the point I just made around no one's doing due diligence on 11,000 securities, we send out a compliance file twice a day to the broker-dealer community which they then consume and determine how to treat each and every stock. And so if you are on the QB or the QX market, certainly that puts you on a much better footing, because you're, as a company, you're sponsoring the quotation. You're required as a company to post materials, whether that's news, fact sheets, slide decks, onto our system. So now there's a mechanism to own the quotation. So it's better corporate governance, it's being a better corporate citizen within the US, it's providing US investors with redistributable news flow throughout the US financial community. But the QB market provides a service for about 1,000 companies. I think it's a great market for those small and early stage companies who may have grander plans to work their way up the food chain to QX at some point. We have many of the really active brokers, whether it be B. Riley, Citadel, Virtue, Canaccord, right? They trade heavily in the QB market securities. But as you think about, again, how you're going to be treated and the best way to market your story, I think if you qualify for QX, a company should be there, not least because there's the least friction in terms of just the trading of those stocks. One of the things to think about is, what are you telling a broker when you're on QX? So you won't see this as an investor per se, you might not see it as a company, but when you're on QX, you're meeting a certain share price requirement, you're meeting a certain market cap requirement. You cannot be a penny stock and trade on QX. And so just purely from a risk management exercise, if you're looking to grow your US shareholder base, raise your valuation, lower the cost of capital, if you do it on QX, you're just going to open the door to a far broader audience of brokers, better liquidity, more volume. And so you'll get a far greater return on any of the money that you spend on marketing the story, going to conferences, etc. Just a couple of things to close that thought process out. I presented on a IR Magazine Canadian forum a couple of weeks ago, and in preparation, I just went through some of the data points on our market. And the first thing I noticed was that the trading volume on our markets has gone from about $32 billion a month to more recently around $75 billion, right? So this is not something to be ignored. This is a huge opportunity for companies as they market to allow people to trade. But QX specifically, the client base represents about 4.2% of our overall clients on OTC, but the trading volume in those securities represents about 34% of total OTC volume. So whether you're a stats person and you want to be shown why is this important, or whether you just look at compliance and trading function as the want or the need, that's why, again, we segment the markets. QX we'd call the best market. And that's why Heineken, BNP Paribas, Roche, Danone, Air Canada, Ivanhoe Mines, they all choose QX as their US trading venue of choice.
Wonderful. And, when you talk about trading and trading successfully, I think this kind of circles back to Mark again, because so many people are unaware of DTC eligibility because it's not required. But, when I'm speaking with my clients, it's always highly recommended that I send them over to Mark to discuss it and learn what it really means. So I would love it, Mark, if you could actually help us understand what it means for shares to be DTC eligible and how issuers actually go about obtaining it, and really what are the benefits behind doing so?
Thank you, Becky. I appreciate your question. So yeah, you can kind of think of it, if the shares are not DTC eligible, then it makes it very difficult to transact using a physical form of paper. So when shares are DTC eligible, a buyer or seller making a trade in such issuer securities, they're not required to produce a physical stock certificate in order to settle the trade. So really, the only share certificate that might be available would be held at DTC. Instead, DTC eligible shares will trade electronically through the buying broker and selling broker's accounts. And so this really helps save a lot of time and money for the shareholders. And without DTC eligibility, it makes it very challenging for an issuer to establish an active market in their shares. And so we see a lot of times where issuers are not DTC eligible and they don't quite understand why they're not getting the liquidity in the marketplace. They have shareholders that are frustrated because they can't get deposits made, because a lot of broker dealers in today's time frame will not allow for shares to be deposited if they're not DTC eligible. So one of the benefits to making shares eligible is it will help, or can help, increase the liquidity in the marketplace. It can help drive down costs and really promote efficiencies in those securities. Once the DTC makes the securities eligible, they can be distributed quickly and economically via an electronic book entry, delivery, and settlement system. And so this really facilitates an orderly flow throughout the marketplace. Now, in order to obtain DTC eligibility, Becky, I kind of use the analogy with what you assist companies with. It's similar to filing a 15C211, where issuers must file through a market maker and cannot go directly to FINRA. Well, when you obtain DTC eligibility, issuers cannot apply directly to DTC. They have to go through a sponsored DTC participant. And so that's where a company like ours can really help facilitate the process efficiently and simplify the process so that issuers have, a one-stop shop solution in order to obtain eligibility with a really positive experience.
Absolutely. And how
Sorry
long do you
to,
think?
sorry to
Sorry,
jump
go ahead,
in.
Chris.
I was just going to say, yeah, Mark, I just, in terms of the market, from a market operator perspective, completely agree. DTC, not a requirement. And frankly, if you're a Tencent or a Nestle, you probably don't pay too much attention to this. But I think within the smaller you are, the by far more important it becomes. I do strongly recommend companies get DTC eligibility set up if they come from a location that allows for it. And just from our perspective, we see more brokers, better liquidity, a deeper book, more volumes printing in OTC for those issuers that have set up DTC eligibility. So I would agree, Becky, when a company approaches us, that's the recommendation, best practice all around.
No,
Yeah, and
absolutely.
I would like to say one last thing. Many broker dealers today in the US, they have firm-wide policies that prohibit their broker dealer from trading any shares that are not DTC eligible. So to eliminate that challenge, it's really beneficial for companies to, facilitate that process and make sure that their shareholders can deposit their stock and transact electronically.
Now, once the FINRA 211 clearance comes through, and I've alerted you to that, how long does your process take in order to obtain DTC eligibility?
Yeah, so I'll just kind of go through the process with DTC. So they require a certain set of documents to obtain DTC eligibility. There's a couple different paths when you file for eligibility. One is a new issue, and that's just securities that are going through, an example would be an IPO, where the shares haven't been issued yet, but they're going to be issued upon a closing settlement date. And then there's another path, which is the secondary market eligibility. And those are shares that are already outstanding. DTC has a standard review process for the secondary market eligibility. And it typically takes up to 4 weeks to obtain eligibility. And that time frame can vary based on the backlog and kind of the workload that DTC has. But I'd say a good rule of thumb is somewhere into that 2 to 4 week time frame.
Right. And that's where I always hope that we can all line up our processes together, where it all eventually, when I get them officially onto the QB or QX, we hope that the shares are DTC eligible around that same time as well. But obviously that doesn't always happen when working with different groups, but always the goal to get them there at that same time. And again, this comes back to you, Mr. Kraft. It's, once I've worked with Chris over at OTC to establish the OTC quotation, Mark's completed DTC eligibility, it's time to start trading. But how do these issuers get their story out there? Why is market awareness and media so important for these issuers?
The key word is putting your act together to make it happen. And, again, I start out with managing expectations. For all the years I've been in business, every company wants their stock to pop and break records and be the highest volume of the day and break price records, and because that's how everybody's going to make money with, getting your news and your story out there. What we like to say at SNN is, if you're going to put your story out there, use our media. And media is important because now you're talking about video, and press releases are essential. But if you have a video interview of a CEO, think about it. It's so much different from just reading about the company or deep diving into their financials. Not everybody's going to jump on doing that, but most everybody's going to watch a video interview of a CEO and see how they are under question, and see how they react to the question, and see what their temperament is, and various other kinds of characteristics that come through in a video interview. And then it's where that video ends up. Where did that video come from? And, was the video promoted? So you have to be careful to stay essential, newsworthy, practical, honest, and give a good impression as to what your company is all about. And further to that, there's the in-person conferences, which COVID-19 put a kibosh on. And then there's the virtual conferences that most everybody now is, so Zoom oriented, it's, boring, but you still, that's how you're going to reach your audience. And that's how your audience is going to find out what you're up to. So we always say, again, at a conference, put your best foot forward, talk about the things that are both good and, by the way, bad about your company. You missed an earning date. You missed something, talk about it, give the information, because it's about the trustworthiness of your messaging is going to give you that long lasting investor, not only interest, but they're going to hold on to your stock if they go in and buy it. So it's all about creating interest, getting shareholders to become shareholders and investors. And then as you move along, keep them interested, keep them holding, and maybe purchasing more. So it's an event that starts pretty close to being listed publicly, getting all your ducks in a row through your ecosystem. And then it becomes our helping hand to provide you access to an investor audience that will appreciate all of the work that the company has accomplished. How far have they come? Are they in a sector that, look, there's so many new sectors starting every month. So what we see is the interest by the investor audience wanting to know what's going on and the new ideas. That's a big struggle for investors. So the more information you could put out into the market on reliable places, I will say like SNN Network, but at the same time, there's the investor relations part of it, there's public relations part of it, there's in-house investor relations, and of course, you have to have a website that's accessible and helps, investors when they go to your website. If you don't just generally impress them, at least they're not turned off. So it's a method of presenting your company to an investor audience, making them interested, getting them excited in some cases, and they want to participate. And last but not least, as a CEO, C-suite officer of a publicly traded company, make yourself available and let them reach you and take their questions. And it's build that relationship up as you move forward.
No, I think that's really well said. And obviously many of the issuers, if not 90% of the issuers I work with, are international. And, that's obviously the focus to our discussion today, is how to establish secondary trading. So Shelly, do you see any differences or challenges that come for international issuers establishing secondary trading, and or how do you really help them focus on that element of the process, being new to the US in front of US investors?
Well, what we've found is there's a lot of expats living in North America. So, for instance, we work with the Australian companies, the Canadian companies, various other, UK, Norwegian, the Nordic countries, markets. So, there's how many of those companies that are from other countries, originally listed in those countries, have operations in the US, have employees in the US, have people who want to buy stock in the US. And it's literally next to impossible, to maintain an account overseas with the differentiation in hours of trading. So that in turn brings a lot of those newer investors. Hey, I could now buy it in the US. That's fantastic. I can accumulate companies I'm interested in. At the same time, that interest in the shares that are listed in the US has an impact on their home market, so that there's not a new issue in the US. It's the same shares that are traded everywhere in the world. So the impact on the market cap in the US is in a lot of cases is based on what the appreciation in the stock price might be in the US.
Absolutely. And I think it kind of goes back to you, Chris, with why is OTC relevant then for issuers if they're already listed on a stock exchange? If they're already public on the TSX, say, for example, establishing that secondary trading, how is that relevant?
Yeah, I'll start actually by going back to a point that Shelly just touched on very quickly, which is about expectations. This is a long-term commitment, right? If your expectation is that you set up DTC and clear it to 11 and join QX, and the next day you're going to see a share price appreciation or increased liquidity, you're going to be very disappointed. Now, we have had companies that have joined and seen that response in certain sectors, but the reality is, to what Shelly was describing, is look, you have to commit to the process. You have to take the long-term view. Don't look at your share price on a daily basis as the result. It's a commitment to communication, consistent messaging, showing how over a period of time you've delivered on various goals. And that all comes down to sort of the best practice that Shelly's getting to there, right? Which is you have to go out and tell your story, but you have to keep going out and telling your story. And, whether it's an institution or members of the retail community, people aren't going to buy your stock just because you make one good presentation. So I think, that's kind of the mindset that you have to come into this. So to answer your question, Becky, there's so many misconceptions in terms of why this is important. Not least, the most frequent one is the CEO of a publicly traded company comes to New York, they come into our offices. Why does this matter? I'm public in Canada, I'm public in Australia, Germany, France, Switzerland, wherever it might be. Well, then I open up my US brokerage account and I try and buy the shares, and it's either nothing found or there's a spread wide enough to drive a bus through to buy the stock. So then there's kind of that light bulb moment that, okay, so this is important and highly relevant if the US is important to the company. I think also if you're in the US and you go to Google Finance or MSN Finance or whatever your venue of choice is, and you start putting in the company name, the news flow is tied directly to the US ticker. People might not often pick up on this, and certainly the management teams of foreign or non-US listed companies don't see this because they're not looking while they're in the US necessarily. But if you're not sending press releases with your QX ticker or your QB ticker, either that's not getting distributed, it's not getting redistributed, or just picked up, it's not being filed in the right places. And so, there's a whole conversation here about why this is relevant. I didn't mention before, but the reason why so many more times companies are joining QBQX versus a US exchange is that we're talking about secondary trading. If you're already public in Canada or Australia, as an example, you already have the shares. You're not issuing a new class of share. You don't need a second listing. You don't need SEC filing. There's not an SEC filing requirement. You don't need to be Sarbanes-Oxley compliant. So I think as people think or look at this as a subject, is the US important? Does it play a part in your USIR programming? It's rare that you meet someone that says no, but then, as you look at the plumbing and the important steps, DTC is important, the 211 is important, having a good tight spread is important, having someone in your corner who can go out and help you market the story on a regular basis is important. So I don't know, I could talk all afternoon on the subject, but in the interest of time, I'll let you guys move on.
No, well, thank you. And obviously having a good sponsor is important too, right? No, I think everything, obviously, as Shelly calls it, this is our ecosystem. We all play different parts in the process in helping issuers establish, a successful transition into the US. But something I thought would be interesting to discuss for all panelists, and feel free to chime in where you'd like, but what would you say is the number one question you get from issuers, and or maybe the biggest challenge they might have to overcome in your respective process? So I'll let someone jump in there.
I'll jump.
Go on, Shelly. Go ahead.
Just give the audience another voice here,
There you go.
Well, I think that the biggest question is, what's going to happen after I, get listed is, from the standpoint of what's going to happen to my stock. How do I, I'm taking on this burden of being a US company. I have other issues that I have to take on. I have expenses. So how do I capitalize on all of this work and and by the way, let's be perfectly clear. The work that you do does not happen overnight either. And that has to, you have to manage those expectations, which in turn, we have to manage when a company should really start doing their market awareness and investor visibility. But what we always say is, it's good to start to pre-market it, because, marketing in the US is a lot different than marketing in practically anywhere else. I mean, between the 11,000 companies that are on the OTC markets and PINKs, and NASDAQ and the New York Stock Exchange, and the availability of the Toronto exchanges and the Canadian exchanges and all, there's a lot of choices. So it's about, how do you compete with all of the other publicly traded companies to get the audience that's going to pay attention to you? Now, it's not only the quantity of press releases you may make. That doesn't necessarily always work either. There's a happy medium between how many press releases you make and how many you should make. And then there's also that interaction of giving a quality press release. So you're not wasting anyone's time with an LOI press release or an MOU press release. Sorry, if a deal's conducted and it's completed, that might be a better idea to do a press release. So once you establish the ground rules of how you're going to be treating your press releases and treating your messaging, then you could make the decisions as to what methods you want to use to get that message out. So again, the question that we get is, what should we do once we're publicly traded in the US?
Perfect, thank you.
And there's so many more ways of doing that now, right, Shelly? So I'm sure you've seen this change dramatically since the 90s. I know starting my career, 99, 2000, if someone had said to me they were in investor relations and they were going to be starting a digital marketing campaign, I probably would have run a mile. And yet, as human beings, the way in which we consume information has changed. The smartphone, the shortening sort of attention span that we have just generally has changed the way that people consume information and the way in which you as a company should think about marketing your story. So I do agree, Shelly, that keep news flow impactful, keep it regular where it's required, but think about the different avenues for distributing your messaging, right? It's not just your press release or turning up to a handful of conferences. Digital marketing, digital content, whether it's videos, YouTube, things that are hosted on your own website, things that are distributed through OTC, virtual conferences. There's lots of ways to continue to engage an audience. So food for thought.
Well, if I may add on that topic, we're a media company, not an IR company. So we support that IR world out there, from whether it's an in-house or exterior company. But I also, what you're saying is the fact that less and less people read. I've been told, and I've seen it myself, that you could put out a press release about your own company, and even your shareholders won't read the press release because people don't want to take the time to read. But if you put out a 3 to 5 minute video interview, the chances are one of your investors, a new investor, someone who's looking for a new idea or an existing shareholder, will watch a 3 to 5 minute video interview because it's not going to take a lot of time. You get a bunch of information and facts out of it, and you can move on. So that's a big change in the market.
Yeah, and I would like to also add to that. So, most of the companies that contact my firm, the main reason why they're calling me is because they want to establish additional liquidity. And so they want to, cross list into the United States. And talking about our ecosystem amongst the four of us and the services that we provide and assist these companies, I think is really a prerequisite to help them attract investors and also, facilitate their desires of establishing an active market. Chris had mentioned QBQX, a platform that gets a lot of visibility, as well as, Shelly's strategies to help get exposure for these companies. And then, Becky is assisting with the sponsorship piece to get them on the QBQX platform, and then along with the DTC eligibility. Another thing that I get a lot of questions asked is, we don't know who to work with. We don't know, what transfer agent, who's the best transfer agent, who's the best, market maker, who's the best, attorney, advisors, things of that nature. So part of the reason why we established our company back in 2012 was to build a network of high quality service providers that can really help provide a team effort to help facilitate the whole process. So I think that that's, really been important for these companies that reside outside of the United States.
Yeah, thank you, Mark. You touched on an interesting subject there around liquidity. We get asked that all the time, right? How do I increase my liquidity? Well, certainly getting set up here is important, but for whether this is aimed at a company or the investor, if you think about liquidity, it may be that you're highly liquid in your home market, but you're suffering from perhaps a lack of liquidity within the US. So having the market makers and having DTC eligibility certainly helps. And I think what most companies tend to find is that as they go out and market their story over time, there's more brokers in the US that will be holding the stock and able to trade US to US, which prints volume in the US on OTC. A question we often get around this subject is, what are people buying when they buy the ticker? Well, it's just an ordinary share, right? It's a 5-letter ticker symbol ending in F for foreign, indicating that I'm buying an ordinary share in the home exchange. But the brokers, in some cases, will take the order in the US using the QX ticker or the QB status, and then they might lay the trade off into Canada, therefore printing the trade in Canada, settling in Canada, and the volume prints in Canada. So I think the liquidity subject is an interesting one, and I think one that's often misunderstood. Just being public here certainly helps, but one of the reasons why exchanges globally recommend that companies join is that they know the impact of joining here simply creates far greater demand in trading volumes on the home exchange, therefore adding to the liquidity. So it's a rather simple subject, but I probably just made it sound overcomplicated. But yeah, added liquidity is a huge benefit to doing this.
No, absolutely. And I think, for me, the number one, question I get is just people might be overwhelmed with how the process works and how they establish the secondary trading. And so for me, I just really try and make it my goal to really advise them each step of the way to make sure they know what they need to be doing and when. Ultimately, obviously, with us providing the sponsorship letter, but we've really turned that role as sponsor into more of an advisory practice where I really am working with them each step of the way. I'm on all the emails with OTC to make sure that they know what they need to be doing, because obviously there's so many different things being thrown at issuers in terms of what is needed, whether it's with DTC or from me or from OTC. So I really try and keep everything efficient for the issuer, so it is in a nice, clean order, and they know what needs to be done at different parts of the process. And I think that's why having an ecosystem like that is so great, because we all add different elements of expertise to the process, and we all can really help guide them in the most professional and enjoyable way. I really like to just make sure my clients are happy through the process, and ultimately, obviously, everyone wants it done as quickly as possible. So that is part of my process, is to try and keep it efficient for them, and with the goal of hopefully getting their secondary quotation established within a 2-month period. It could go quicker, it could go longer. You just don't really know. And that's really where I just try and stay open with my clients about the process, and keep them moving along. So it's it's very interesting working with international issuers on this process as they really learn what they need to do.
Yeah, that's a good point. I think perhaps one that gets overlooked sometimes is the level of service, the level of customer service as a company navigates this, often for the first time. I've been with OTC for many years, and I've worked with Becky closely for many years, and obviously know Shelly and Mark very well. But I think I'm extremely comfortable recommending this kind of sort of setup where I know the job's just going to get done. I know it's going to get done efficiently. So I think it's an important point, Becky, the level of customer service, the cohesion of the process where everyone's talking to each other and keeping each other updated, so that the company isn't left herding cats, so to speak.
No, absolutely.
Yeah, Becky, you made a very good point there, where you mentioned that there's so many moving parts with the different service levels, that being able to simplify that process and coordinate it in a way where it makes it more efficient, that's very beneficial to these companies that really don't know how to navigate or who even to talk to get through the process.
Absolutely. Well, with that said, I think we've really covered the whole process from start to finish on how issuers establish secondary trading in the US, and what they really need to do to make it a success. Does anyone have anything else they'd like to add in order to, wrap things up today? Obviously, it's been a pleasure speaking with all of you as usual, but if there's anything else anyone would like to add before we, say our goodbyes, I'd love to give you the opportunity to do so.
I have one thing. That haven't we all noticed that there's been a trend towards more and more foreign companies wanting to get listed in the US? This is not a fluke. What's the reason for it? And that reason is, generally, there is more liquidity in the US. The size of the investor population is enormous, especially since the millennial world has become, from games to investing, that it's no joke anymore. They literally can move a market, as we've seen recently in the headlines. But I would throw it back to everybody. Don't you see a trend in foreign companies definitely coming to the US more and more?
Yeah. So look, last year, bizarrely last year, but it was last year, we saw a 35% increase to the number of companies from outside the US joining QX. QB market, so you're talking early stage entrepreneurial companies from outside the US, was up 85% in terms of applications. And volumes are up substantially. Retail has more time on their hands and apparently money to put into the market. So, now's the time. The other thing I did want to add, by the way, thank you to Shelly and to Bobby and to Planet MicroCap for hosting and organizing today. We definitely appreciate that.
Thank you for sponsoring and
participating. Thanks for organizing, Becky.
Absolutely. Mark, did you want to say something there?
No, I would just like to, kind of reiterate, I really appreciate the opportunity to assist as a panel member. And yeah, it's been a pleasure to work with you guys over the years.
Absolutely. And I second that. And, just honored to be sponsoring today. And we hope that everyone has a great conference. And if there's anything that we can continue to answer for you or clarify, we'll have our contact information up for you here. And please don't hesitate to reach out. We'd love to continue the conversation. Otherwise, have a great conference. And we hope to meet with you all one day soon. Thank
Great
you.
job, everyone. Great job.
Thank you.
Thank you, everybody.